Good morning, everybody. Welcome back to the Schwab YouTube coaching channel. Our next topic this morning is Trader Talk in today's market, and I am your host, Kevin Horner. It is a beautiful spring morning here in Denver, Colorado. Thanks for joining me today, everybody. We've got a little bit of data release this morning. We did get a PPI number, and it looks like the market's going to be reacting to that as we get started, but also have plenty of stocks in the news this morning. And as I like to do on these solo days with all of you, we are going to look back at a trade we placed, an example trade we placed last Thursday in this segment, and we'll see how that one worked out. Turns out it didn't go well for us, unfortunately, but those are the breaks as it relates to trading. So we're going to talk about what we did and what resulted from that trade, and look to place another example trade on some one of these securities in the news this morning. We've got quite a few headlines that I want to get to with all of you. So hearing from you today will be encouraged. Please feel free to make comments and questions utilizing the chat function there to the right of our presentation window. You can say hi to John McNichol while you do so, everybody. He's in the chat, keeping an eye on things. He'll answer questions that are pertinent to the topic that I'm unable to get to this morning, but I'll certainly try to bring your details, comments, questions, etc. to the segment as best I can today. So before we dive into disclosures, reminder to follow us on X. I'm available there at Kevin Horner CS. And of course, John is at John McNichol CS. Great way to engage with us outside of the classes we host. Remember, that's the best way to do that. But alternatively, remember that all of these segments, or I should say the majority of our classes here, are archived in the YouTube coaching channel. And you can always use the comment section below those to leave us questions as well. Those come to us directly. Now, with regard to disclosures, please remember that our conversation is exclusively for your information and your education. We do not make recommendations nor endorsements for a particular strategy or approach to trading the market. We do talk technical analysis in this segment. It's important to remember that's merely a piece of the puzzle, not to be considered the end-all, be-all. We do not encourage you to base decisions exclusively from your technical viewpoint. The extent to which we discuss options today should be limited, but I want to cover it briefly. Just remember that these are not appropriate for all investors. You want to be familiar with the characteristics and risks of standardized options before considering any transaction. We ask that you approve each account individually here at Schwab prior to placing any trades, of course, and you can maintain various levels of option approval over those various accounts. Okay, our agenda is going to be pretty standard, everybody. We'll hit the major indices today. S&P 500, NASDAQ 100, Russell 2000, probably look at the SOX again, and then take a peek at some of the sector movements here the last couple of days. What we have been looking at has been the same stuff broadly. But if anything that I've, don't cover today, remember that archive's available for you. Yesterday, we did take a look at some of those commodity movers, may get to them as well today. As always, happy to hear from you. So if I can quickly bring your stuff into the conversation, I'm happy to do so. All right, let's see how things are looking as we get started here today. We're going to bring up the S&P 500 to kick things off. So we've had a little bit of a breather here this morning, as you can see. So we got into yesterday, we made that new short-term high. Yesterday was really a day of chop, it would seem. We didn't really go anywhere. We had a fairly tight range. If I push this out to say a 15-minute bar, you can see our range yesterday was pretty tight, 58.75 up to maybe 59.05, 06 or so. So about a 30-point range for the day. Wasn't terribly active, didn't really give us a whole lot of information. Now this morning we've had a little bit of weakness, a little bit of a gap lower, if you will, but not a huge move, of course. We are sitting on this S1 ledge here on the intra-period charts. So we're going to see if S1 provides us some support. The question becomes, can we maintain it for the first 15 to 30 minutes of the day? What we want to see is pushing off of that level and back into that purple 58.90 if we're bullish, of course. Now that changes the view if you are bearish. And at this point, certainly you would see moves through the intraday low today. And this could be that brief pause in what we've seen from the market. But, it's really hard for the market to continue to stay as upside aggressive as we have noted here. Now, I do think it's important to make note of the fact that we have achieved new levels in price. And sometimes that means that after having achieved those levels, we need this brief pause. Remember, pauses and sideways consolidations can absolutely hold, but the levels that we want to maintain are the ones we've most recently achieved. So if we want to stay bullish, the one that stands out for me, and I think many traders, is this white line I've drawn in, coincident with the peak we took out from March with this move higher this week. So Monday's move was a wonderful gap, of course, in continuation move tomorrow into, the next day on Tuesday, followed by that indecision or doji on Wednesday ahead of this morning's PPI, which I think is, like I said, just more data giving us more info with which to work. We are hearing a little bit of commentary out of the Fed today as well, though I don't expect that to have a whole lot of impact on the overall market. So if we are, as usual, trying to discern our next opportunities, the key level may very well be the low from yesterday and the high from yesterday. The low from yesterday is the one we've tested already intraday. That was 58.72. Today's low already 58.67. So we would call that, to this point, a successful test. Now, if we take out the lows of the day and we get some momentum to the downside, intraday short-term traders might be looking to cover some of their upside moves that have been working. If you were a buyer back here at 55.80, for example, and you have a chance to take 300 points of profit, traders are probably patting themselves on the back and will look to do so. But some of you have a different approach, right? Some like to sell when the positions are moving to the upside, capturing that additional upside opportunity, selling into that strength. Others of you would prefer to sell on weakness. So that's what we're waiting on, is just a little bit of decisioning here. Do we get more trade detail below the low from yesterday, and does that cascade us for the day? Maybe it becomes another day of chop. We'll continue to see how that works out. But I imagine it's going to look similar with the NDX here. There we are, hanging out pretty well, maintaining the level that we hit yesterday. Again, very similar in nature. The low yesterday, 21,199, just shy of 21,200. Our low today, 21,192. Oh, looks like I had a long sell there. Okay, so we've just gotten unloaded on some shares. We'll see how that worked out. But again, the same thing here in the NDX, everybody. A little bit of a weak open, right? Basically testing the lows from yesterday, getting a little bounce. Now let's see if bulls take complete charge here and push us higher. Do we work our way back into the pivot there around 21,300, or do we go about our move to the downside from here, taking out the lows? This is what at least short-term traders are going to be monitoring for the morning here. There does appear to be just I'm going to use a silly term here, a smidgen of weakness. It doesn't seem to be terrible at this point, but we can get swings and pullbacks that can be rather deep pretty quickly here. So as always, I'm encouraging you to be properly positioned. Don't allow, and when I say proper is to each of us individually. Remember, it's imperative that we as traders know those details for ourselves. What is the process by which I will make my decisions, and then give myself those step-by-step actions to take, right? It's all about, if this occurs, then I will do this. Having that roadmap, that playbook to take action is so paramount to being able to really be quick and speedy in our decision making. The step-by-step planning, whether you choose to write that stuff down or not, is really key to being able to act quickly. Not having those ideas will kind of give us more of a struggle to work through the thought process on the fly. And so my hope is that you're considering what can happen, both good and bad, with the market, so that you can give yourself some steps to take action in the market as you would prefer. Okay, so we see NASDAQ holding up, but a little precarious in terms of its intraday bottoms here relative to yesterday's intraday bottoms. And remember why we're talking about intraday bottoms. Again, it's because The opportunity to trade below the low is talking about the potential that we've made. Yesterday's move was a high. So if yesterday is the high trade in our rally, and it's been fantastic, mind you, then one instance where bullish traders who've been participating every step of the way, they might look to take profits or look to reduce position size is with a close below the low of the high day. It's the exact opposite of the hold move, the close above the high of a low day, meaning simply that it could be the point at which the trend is pausing or potentially reversing. And so traders who've been profiting to the upside might utilize a close below the high day as an opportunity to take a little bit of profit. Remember though, it's early in the morning. It's the first now 10 minutes of the session here. So we can't get ahead of ourselves. That's why we start both hold and the CB, the close below the low of the high day. Those are both beginning with the word close. So for a lot of traders, it's the close below those levels or the close above those levels that matters most. So bear that in mind. Some of you will be a little more aggressive in your process and you might act on intraday moves. But in terms of something that traders are looking for more consistently, close values carry a little bit more weight. I see some of you are already helping me out in the chat. Big thanks to you. I see a question here from Danny and Callie about the pivot points. Pivot points are absolutely considered a study available to you. You can place those on your intra-period chart. It's easy to find with the beaker here. You can search for it just by pivot. You can type that word in. There you go. And then just make sure you customize some of the details. One detail, notably, R3, S3, by default, they do not have a check mark in the show plot, so you'll want to make sure you add the check mark there if you want to see those levels. Additionally, if you have it set to auto, well, then the lines pop up as dotted lines. Some of you want to see it like I have it, which is more of a standard solid line, it looks like. So maybe change that to numerical, and then it should appear as that solid standard line. So yeah, get those pivot points added. They can stay both on your intra-period chart. You can carry them into daily charts if you would like to do so. But for a lot of traders, you don't want to necessarily see action beyond the pivot levels for prior days. So some of you want to see it just like I have it. You would want to change show only today to yes from no. So just keep that in mind as well. So there's the pivot point question at least answered for you. Hey, see, we have a bit of a survey, everybody. Great. That's an opportunity to give me some ideas and feedback. I'd love to hear from you. So take a minute to do that. In just a minute, trust me, you don't need to devote a whole lot more time. If you want to make note of anything specific, please feel free to do so. All of your commentary comes to me directly. I greatly appreciate your feedback. Ideas for the segment, particularly solo segments, not a bad way to let me know that there's something you might like to see as well. So if you click that link, it'll open in a browser window for you right next to this one. You can get to it after the class. That would be greatly appreciated for me. Yeah, we're going to talk a little bit about UNH and its move today, Ricebird. There's been some details, additional news on United Health, so we have to look at it, unfortunately, because the news is not positive, obviously. So let's move into the Russell here, guys. Let's see how the RUT is acting. Got a lot of lines drawn in yesterday. Miss Connie and I were talking about the upward movement, the stair-stepped approach that we've seen here. But again, the concern, not a concern, excuse me, but rather that maybe we have put ourselves in a little bit of a drawdown move here. Can't be terribly surprised by this, though. I mean, again, the pop to the upside's been great. We've lost a little bit of steam as we pushed into those prior peaks from March. Remember, the NASDAQ, the S&P both popped through those levels from March 25, the highs. But the Russell managed to find it as immediate resistance. Now we'll have to see if that holds. The gap level here might be more important right now since we're sitting right on it. Yesterday, the move, as you can see if I zoomed in, the move here, we got a doji on Tuesday. So remember what a doji is, where we open and close essentially at the same level. We've got tail action above, tail action below. That tells us that traders on both sides tried to push the market and couldn't do it for the day. So a close and open essentially at the same level tells us a day of indecision like this. Now, yesterday's move took us through the low of Tuesday, and that gave us a close below the low of the high day. Some would use that as a reason to remove some profit opportunities from the Russell trade. Some of you might sit on your hands, and some of you might just be looking at the lows we created with the gap. And now that we've got a gap level there right around 2075 or so, that may very well become a level beneath which traders would then take further action. Again, none of these are levels that are going to be hard set levels. We traders need to define these as to whether they are valid levels for the way you like to trade or the way you like to work. There remain optimistic viewpoints here. Number one, you've got a beautifully rising RSI, so more or less a validation of the short-term uptrend. We also have a 20 period, or in this case, a 20-day simple moving average crossing a 50-day simple moving average to the upside. Not a real shock given the impressive movement in price, but it's also a reminder of the potential shift that we are witnessing in the short-term trend. So keep this in mind as well. Some of you will say, yeah, I don't mind it if we fall through the gap and start to fill in here. That gives us a chance to make a higher low along the way again. And if we can make another higher low, we could absolutely be witnessing the continuation of the short-term uptrend. So again, as always, time frame for your process matters and will dictate to an extent your exit strategies and a little bit of that process as well. But I wanted to make sure we highlighted some of those important levels here. Looks like the gap ledge, at least for the near term, potentially today and into tomorrow, becomes very, very important. The last note here is if you think that a move downward through the gap level at around 2075 brings you 2040, well, that only says you have to be comfortable sticking with what you're holding in the Russell position size down another 35 points. If you can sustain the 35 or so, maybe you can sustain a level down to the 20-day moving average in the ballpark of 2000 or 1985, then maybe there you can stick with everything that you're long. Just be thoughtful about how you choose to maintain positions versus building cash, right? You don't have to sell everything if you're feeling like the market's a little weak in your position size. You can always reduce position size without selling out of everything. And a lot of traders find comfort in that because it enables them to be right a couple of different times, right? You might be, if the market drops and you sold some, you were right to have done so. If you sold some and the market went higher, but you didn't sell everything, well, you were still right to have kept some of that position on the side, right? So it's okay to be piecing in and piecing out of your positions. I think that a lot of traders benefit from that emotionally, at least. Okay, what else is going on in here, everybody? Lots of questions, some individual stock detail. Yeah, we're going to spend a little more time on individuals today than normal. Let's look briefly at the semis, which are getting a little bit of a pullback. We're going to look at a couple in the semi space here, individual equities. Momentarily, we are trading below the low of our high day. If yesterday is in fact our high day at this point in the rally, we'll see if that retreats any further. We're pretty close to the 200-day moving average, so we're looking at what could be day 3 above the 200-day moving average. That might be notable for some of you looking for confirmation. For some traders, the rule of three closes over resistance. Whatever you deem to be resistance can certainly be a bit of a confirmatory signal. 3 consecutive closes over those levels. Other traders are going to look for more. So, know those ledges. And others would just say, yeah, that 200 might be important, but maybe the more important level is the gap ledge once more in the stocks. So we could certainly see a pullback, a test of the gap level at around 47.07. If we tested and held it, then this becomes an excellent new level for many bullish traders to consider downside targets, meaning an area under which they would then start tightening position size once more. So we'll see how that could possibly work out in the coming days as well. We are getting a little bit of a lift this morning in the VIX. Nothing terribly concerning just yet, pushing into 19. The level we talked about yesterday is really back over about 20 and a quarter up to 20 and a half. If we start to see significant moves through this gap, this will be difficult to sustain and probably bring a little bit of short-term pullback in the broader indices would be my expectation. But that's if we see the VIX climb further back into that 20 and a half level. We are seeing the yields come off a little here. Now, I would not be all that disappointed if yields came down. I think traders in general would prefer to see this. The concern being that an increase to the yield return will make things a little more muddy in the lending side of things. If we continue to start popping back to the upside, then suddenly some of that relief that we've witnessed over the last month or so in relation to the improvement in yields might not carry. So what we don't want to see are yields climbing necessarily. The reason for the climb, remember, if the 10-year yield is moving to the upside, it's because individually we're seeing the selling of U.S. Treasuries, not the buying of U.S. Treasuries. So if we could get back to the scenario of buying U.S. Treasuries broadly, remember what that speaks to. It speaks to the belief in the health of the U.S. economy and the strength of the U.S. markets. If we are selling down treasuries or seeing treasuries being liquidated, it is going to push yields higher, and that can also speak to the lack of confidence in the U.S. economy. So, the move to the upside was less excitable, less pleasing for bullish traders in the equities markets. We would like to see the yields come down, but the move we're getting right now is certainly favorable, but it is not taking us to levels where we would see perhaps a boost to the underlying markets, the equity markets. I think the level we'll have to monitor is kind of right through here, and that's basically that gap. So not that that's a shock, right? I mean, it coincided with the gap that we got in the equity markets this week, except that instead of buying treasuries, we've seen selling of treasuries. So this has been a little bit antithetical to maybe expectations, but we'll see how this one goes, everybody. Now, in terms of movement amongst our groups today, seems a little notable that collectively, while we are moving, sideways to red at this point, right? Off a little bit in the SPX, the NDX, the Russell, about 0.5% collectively. We are getting leadership from some of our defensives. So we're seeing here utilities lead. We're seeing real estate lead. Now, when I say lead, it's very short-term in nature. So it's difficult to say, hey, real estate looks great. It really doesn't from a technical standpoint, everybody. I can point out that you've got this downtrend here. I can point out that we were rejected at the 200-day moving average and we're up a little today in the real estate view, but that's not fantastic by any stretch. And the utilities, on the other hand, does have a different look of things. This looks more like we've had a break from a bit of a continuation pattern here, broke to the upside, very fast, speedy test just yesterday. Look at the tail we got on the utilities yesterday. So that seems kind of notable. And now you're getting a little bit more of a continuation. If this yesterday's move is the low of that pullback, well, we've already gone through the high of that low days. So, you could be witnessing the return of the utilities sector here. And, I have to be honest, everybody, we don't mind seeing bullish charts. We like bullish charts, but what we don't want is a broad market being led by defensives like utilities, like real estate. That's not really what we're looking for. Let's take a peek at healthcare. Been a lot of questions in this class of late about healthcare, and my goodness, it's just getting worse and worse. And unfortunately, what are we going to say about it? The reasoning for such a move is less of a discussion topic. Really, we can just monitor the technicals on this. I mean, I know that the market is selling this one off based on narratives, based on risk associated with many of these groups. Now, obviously, the healthcare sector incorporates big players, including United Health. United Health will fall in this space as a multi-layered company in terms of what they do. So they're dragging this as well, but not to the extent that it's carrying the entire sector to the downside. It is a broad sell here, as you can see. So, healthcare as a collective group, not looking great. Let's look at this on a weekly chart. I mean, it's been a while since we've had a need to do that. Boy, trying to find a bottom in this space, I'll tell you what, there's just a lot of action, in this vicinity. Let me just make it a rectangle. So, something like this could be a zone where we get a bounce in healthcare, but the narrative is in the discussion as it relates to the administration working to drop healthcare prices is not going to be a win for a lot of healthcare companies. If you think about it, if they're going to have their margins squeezed, that's going to come out in the form of their price action, everybody. So that's why we're continuing to see the push lower here in healthcare. Unfortunately, it's just not a great setup for the space. I'll remind you, if you are interested in exposing money to healthcare, that's fine. Doing so from a standpoint of long-term investment philosophy, utilizing sell downs like this as your opportunity to add to a space that you need exposure to can make sense. If you're talking about it from a trade standpoint, that's a whole different ball game. And what you're looking here is more like falling knives, and you don't want to try and step in front of those, pick those up. You don't need to be the first to be a buyer in a space that falls like this, unfortunately. So, okay, how about some of the things that are going well? I saw communications request. Yeah, communications has been moving here. This has largely been carried this week, at least, by moves in Meta. Alphabet had a nice bounce back move yesterday as well. So, as the space is concerned, when you look at it from a trend standpoint, the fact that we busted this trend, this downtrend, depending on how you choose to draw it, you might note, hey, we've basically, as soon as we broke this downtrend line and a successful test of it, we've taken off. Communications, if you take the low to where we are right now, up about 10% over the last 2 weeks or so, that's a fantastic move. And I noted here, or also, look at the volume as we've broken higher. So the volume in the last few days in the communication space has certainly been a little bit higher than some of the sell down volumes. So we'll take that as optimistic. But as always, set some levels where you might choose to protect moves. I think some traders, I'm just going to move this line up to what some traders would call that level of support. And maybe ledge here under 337 becomes a spot where they would lighten up. But remember, define your process so you know why you're doing what you're doing, everybody. If you also make note of the oval I'm going to place here, 3 moving averages on top of one another. The 20, the 50, the 200, all coming together in a vicinity between 322 and 327 or so. That's about a 5-point range. But more important to that, it lets us know of that level of importance. That means traders in a 20-day window, traders in the 50-day window, traders in the 200-day window are all looking at that price range, ballpark to about 325. So that provides us quite a lot of confluence and data. Under 325, bullish traders are not going to be very happy here as it relates to communication. So it's a space that's working okay today, breathing a little bit after a wonderful 3-day push to the upside there. All right, you know what? Let's get into some stocks in the news, everybody. Let's talk about what's really the leading detail. Let's talk about United Health a little bit. So UNH pushing lower yet again. We're down about 17% additionally. So, I always got to remind us when we see moves like this, hey, that stock can't go any lower. You bet it can. Unfortunately, this is one that was dramatically higher. It wasn't that long ago, everybody. We were up there at 607 as recently as the 7th of April. That is a really, really rough move. And I'm just going to give you guys an idea of percentage-wise. About 58% in about 6 sessions or 6 weeks. Is that right? Yeah, about 6 weeks. So not fantastic, needless to say. Now, the story behind it. In addition to the weakness that we got out of earnings, in addition to the CEO change, the headline now is that the U.S. Justice Department is probing United Health for potential Medicare fraud. Needless to say, the word fraud playing a massive impact on United Health today. So according to the Wall Street Journal, citing people familiar with the matter, the criminal investigation has been active since at least last summer. Okay, that means we are going on 9, 10, 11 months and not seeing anything. Okay, so that means that it's been quiet. It's been maintained under the radar. That is not a wonderful development, needless to say. So, as I stated earlier, when you see these things falling, it is not a call out to be a hero and the first buyer in such a trade. For a lot of traders, this is a let the dust settle scenario and move on. So yes, they have changed CEOs. By the way, I learned this yesterday, the previous story about the CEO's murder was, I believe, the CEO of the specific, the health insurance side of things, the issuance of insurance, not the absolute CEO of United Health Corporation, but that segment of the business. So please, not that that matters necessarily to the bottom line, but just to keep some clarity at least. It was not the head honcho, so to speak, of United Health. But they have made another ownership or CEO position shift. In addition to this U.S. Justice Department story, Barclays lowered the target on United Health down to 362. Previous target had been 513. JP Morgan lowered the target to 405 from 525. Both Barclays and JP Morgan have maintained an overweight rating. Okay. Now, again, news trumps all in this instance, everybody. Fear is pervasive as it goes to this position. Don't need to be a hero in any way. Okay. All right. Moving off of United Health, because we need to find some charts that look better. Let's talk about something that's going to be a little bit more interesting. So I had an upgrade note on Cisco today. So you can see we have a nice continuation move here. We have broken an area of potential resistance, former resistance, now potential support. So I'm just going to activate my draw tool and I'm going to sling this direction. Now you could look at the support at the gap ledge, or you can go to the low of the day, but I'm just going to, generically suggest right in this area, make that a green line to catch my eye. My eyes can catch that quickly. So nice little development on the earnings there for Cisco. Wells Fargo analysts have upgraded Cisco to overweight. Previously had been at equal weight. New target here at 75. That's up from 72 following their fiscal Q3 report. The Wells Fargo analysts cite the company's accelerating AI momentum for the upgrade. Cisco's orders at 3 out of their 6 largest hyperscalers grew triple digits on a year-over-year basis in Q3. So that stands out for Cisco. That is a wonderful development. And as such, everybody, this is going to maybe give us an opportunity for an example trade. Given the move here, a lot of traders will suggest that the opportunity resides by placing an exit to the downside back under the gap zone here, giving them a chance to take out, not just to push into prior highs at 66.5, but to move through them. So let's quickly back this off into a bigger viewpoint, a larger viewpoint, and see if we have anything on the weeklies that can help us out. First thing I'm noticing is that we are almost immediately at our peaks, right? So the 66.5 up there is going to be an all-time high if we can take it out. So the question is, do traders feel like there's an opportunity to bust through and take this to new highs? And that might be the case. And if they do, well, then we could build a potential trade. The trouble with such a trade right now is that while there is no resistance necessarily over the 66.5 level, because we can't define resistance if we haven't traded above it previous, well, then some might have difficulty saying, well, I don't know about the risk versus reward. And I could understand that. It is the same strategy, Chris. we utilize, actually, I'm going to talk about this. We tried this on a breakout last week on AppLovin, and it didn't go our way. So maybe you do something different, but hey, we take what's available as much as we can. We could certainly talk a different strategy. In fact, before we get into a new example trade, let's look at what happened with App, because I think that would be helpful as just to go back and monitor this. So we're going to go to my account statement. I've got App right here. We bought it last week on the 8th in the morning. We made a 25 share trade. Let's go look at App on the chart here. Let me change that. All right. So we bought it at 352.53. We put a stop order in. We got taken out on that stop on a week open the very next day. It absolutely can happen, everybody. Let's look. So here's where it went. We bought here on this day. We put our stop below. And really it was the open trade of the day that took us out. The very first trade was below our stop, triggered market order. We got taken out. Now, the worst of it is the stock is still up there. Now it's trading at 370. So if we didn't have the stop, or if we had selected a wider stop, gave it more wiggle room, well, then we may have been able to stay in the position. This is not at all uncommon for us to have been taken out only to watch the stock go higher. But it is exactly why we utilize stop orders. In the instance here, it didn't work in our favor. And it's a good example of what can happen when we incorporate stops. But to ignore the use of stops could be more detrimental to our trading process. If, in the instance in this case, what if this was considered, what if this sell down was actually deeper? What if we filled the gap in here and suddenly we're down at 310 when we got taken out at about 329 or so? I mean, there are always going to be instances when the stop goes against us and when the stop goes in our favor. We just utilize those because in the grand scheme of things, if you're trading a lot of trades on an annual basis, the instances when this happens are far less frequent than the instances when the stop protects you. So had to point this out. They're not perfect, right? This is exactly why we say what we do about stop orders. They are not perfect exit strategies, but they can help to mitigate our tolerance for risk and certain risk as it relates to our underlying equities. So unfortunately, the breakout trade and App didn't work. So, with that in mind, maybe we look at something a little bit more cautious or a little bit different. I don't know. We can certainly discuss it. I appreciate that comment, Ocean Life. Yeah, absolutely. United Health's a great example. What if you were not utilizing stops and you had been holding that stock up at 600 and said, oh, well, at 500, I'm still comfy. And maybe if it gets to 4, I'm a little uncomfy. And then you don't have those stops and it keeps on moving. I mean, things like that happen, everybody. It's a great reminder. That's why we talk all the time about position sizing, proper dollars allocated to your trades, so on and so forth. It's very, very important. Okay, so there's a look at our example on App. There's some other stocks we could peek in on here. Let's take a look at Pins. Pinterest got upgraded today at Wolf Research, got upgraded to Outperform, had been at Pure Perform previously. They added a target today at $40 a share. That would be a fantastic move from here, of course. You'd be looking at about a 25% premium. By no means is 40 guaranteed, as you all know. We say this all the time. Analyst ratings, analyst price targets, measured move targets, none of those are considered to be guarantees to be achieved. That said, what I think is interesting about this chart is the area to which we rallied and took our breather. Check this out. If I took the line from the left, I'm going to make it a line at least, to the peaks that we've achieved in here. All right, so you can see we have come to this zone before, haven't we? Right? And we have been rejected at this level previously as well. So this maybe instead, okay, let's think about Pinterest here. Instead of an order that has us buying the breakout as the breakout's occurring. What if we choose to buy the breakout, place an order to buy the breakout should it happen? Now, today we're down on Pinterest on this news, but is it really down, or are we simply in consolidation mode after a great rally? If we like the development of the price action pushing us above the 20, the 50, and 200-day moving averages, well, we have a couple of ways that we can step into a position here. And this could be a fun way to think about it. We've got, there we go. So we've got support near the 200-day. We've got resistance at the highs of the week around 33.5. What if we did a two-pronged trade here, everybody, where we start buying, let's say 25% of our trade today? We can put a stop order under the 200-day for those 25 shares, limiting our downside. We can also place an add position that we would add to the 25% position that we take if we took out the upside. So what if we moved to 34? We could have a buy stop order up there to add to a trade as it's breaking out, and we can participate in the upside momentum. Now, the nice thing in such a trade would be that if we don't break out, well, then we don't add. And if we break down, our stop order under, say, 30.5, for example, kicks us out of the 25 share trade, and we just hopefully keep a relative loss limited in such a scenario. But I don't think that's a terrible idea because it's unclear. You know, we're just a little bit sandwiched between those highs of the week and the 200-day moving average. So why not give this a chance? Let's see how that goes. Let's use Pinterest for our example. We'll do a quick buy so that we can establish. Actually, let's do a buy with a custom stop. So this is not going to put a limit out there to sell. It's only going to put a stop beneath us as protection. So we're going to do a market purchase on our 25, and then we will do a good till canceled stop exit at 30.5, remembering that 30.5 is our trigger, much like we saw with app. If we open below our trigger, we get market order to sell, and we could absolutely sell at a price very different than our trigger of 30.5. Okay, so we're going to do a 25 share purchase and a 25 share sell. I'm not sure why this isn't matching up, but go. All right, so 25 purchase, 25 sell on a stop, good till canceled. So that'll put us into a, you know what, we're going to slightly alter that. Let's make that 50 shares. All right, we just want to make that a little bit bigger of a position size. All right, there we go. So 50. Okay, now, so we've got that position. Now let's look at buy stop over the exit, or pardon me, over the highs. Here, what we're going to do is edit the buy. We're going to do the other 50 shares on a stop, good till canceled at 34. And remember, with a buy stop, that means that we have to trigger at 34 and we get a market purchase thereafter. That means we can't define the price at all. So if, as we talk all the time about gaps lower on sell stops, be remembering the same thing on the buy stop. Let's say we close tomorrow at 33.5, but we open at 37 on Monday. If we open at 37, that's going to trigger the trade and we will buy at market next. That means it could be 37, 38, 39. We are not guaranteed any price here, even though we think our entrance could be close to 34. All right. But we're just trying to add to the trade if it breaks out and obviously work to protect our downside on the existing 50 we've already take. Okay. Good question, Rita. Can the buy be placed for the end of the day? I love that question. Let me just point this out. Yes, we can. We can utilize this gear. Now notice the gear doesn't appear on, I've got my arrow down here in the lower right, just above confirm and send. The gear only appears if I highlight it. You got to know it's there. When you click the gear, you're going to get this pop-up, and you can then define your conditions for window of time. So maybe this states that you only want this if it executes or if it can execute at 3:55 p.m. Eastern today. Okay, so we could, well, I guess I would have to actually do the 03:55. Oh, no, I'm gonna have to do it in military time, I'll bet, huh? So 15:55:00, something like that. Okay, you can also set a cancel time as well. By the way, since I don't have time to highlight this, remember you can search for this, everybody, in our YouTube channel. If you went into the search function and went with something like conditional orders, for example, we are very likely going to find a couple of classes that'll highlight that. And so I'm at time, everyone. Thanks for being here. Hopefully the example trades, the discussion of last week's example trade can be helpful for all of you. Lots of good chat here in the chat today. Thanks to Barb for managing that. Now I'll also point out, we did have that survey. Would love to hear from you on that. So take a moment there, everybody. Really pleased to hear from you if you have the opportunity to do that. But follow us on X. Hit the thumbs up button down below for me. Hope you all have a fantastic rest of your Thursday, everybody. I look forward to seeing you all again real soon.